All right, let's dive into the data behind Rezolve AI. That's ticker RZLV. We're going to really unpack the story of its recent drop. But more importantly, we'll explore some powerful catalysts on the horizon that could seriously change the game. So let's get right to it. You know, the story of Rezolve right now is this classic tug of war in the market. On one hand, you have to ask, is this thing being set up for a massive short squeeze? Or is this downward trend we're seeing just a sign of more sliding to come? Let's dig into the evidence for both sides. So first, let's just set the stage. Rezolve, it had a pretty rough day out there. But as we're about to see, the reasons behind it, they might not be what you'd expect.
The stock closed down 5.02%. Yeah, that's a pretty significant drop. And it tells you there was clear selling pressure pretty much all day long.
But here's where it gets really interesting. Look at that volume. 19.5 million shares changed hands. That is a ton of activity. It tells us there's some serious interest here, a real battle happening at these prices. So what was the big news that caused this drop? Well, the answer is zero. Nothing. There were no press releases, no new SEC filings, not a peep from the company. Today's move was really at the mercy of the broader market and, as we're about to see, a growing pressure from short sellers. Okay, let's switch gears and look at how this bearish case is building. The whole narrative here is really dominated by one thing, a significant and growing number of investors who are betting against the stock. Now, before we get to the juicy numbers, just a quick refresher for everyone. Short interest is basically the number of shares that investors have borrowed and then sold, all because they're hoping to buy them back later at a much lower price. It's a direct measure of negative sentiment. And the numbers for Rezolve, they're kind of staggering. A massive 22.79% of the company's entire free float, that's the shares available to trade, is currently sold short. That is a very significant number. It shows a really coordinated bet against the company from a big chunk of the market. And this isn't old news either. This pressure is building. Just today, short sellers piled on, adding another 910,000 shares to their negative position. So they're not backing off. They are actively doubling down. Now, this brings us to another really key metric, days to cover, or DTC. This basically tells us, based on how many shares trade on an average day, how long it would take for all those short sellers to buy back their shares and get out of their positions. Right now, the days to cover is 1.19. And while that's not crazy high, it does suggest the shorts could be getting a little overextended. Think about it. If some good news hits and the price starts to rip upwards, it would take them over a full day of trading just to cover their positions. That is exactly the kind of setup that can fuel a massive short squeeze. So, okay, despite all that short pressure, there is a strong bullish case brewing here. Let's take a look at the potential catalysts that could not only stop this slide, but maybe even trigger a pretty significant rally. The bulls are really watching three key things. First up, there's a big company call on the 13th. That's huge. Second, if the company can come out and really convincingly communicate that it's going to blow past its 2026 guidance, well, that could be a game changer. And third, there's a new macro factor that's just entered the picture. And if management actually pulls it off, if they reassure the market on that call and lay out a strong path forward, the upside could be substantial. One analysis suggests that a price target of $10 to $13 could realistically be on the table. Now, here's a catalyst that I think a lot of people might be missing. The news about potential free trade talks between the EU and China. That could be absolutely massive for Rezolve. Why? Because the company already has a huge foothold in Europe, and a deal like this could unlock some incredible new opportunities. All right, let's switch gears and look at the chart, because this is where the bull and bear arguments are playing out in real time. We've got specific price levels that are really defining this battleground. So here are the key numbers that traders are laser focused on. The floor, you could call it, the strong support, is down at 281. The immediate ceiling, or key resistance, is at 305. But the most critical level to watch right now is just a little higher, at 315. And why is 315 so important? Well, it's because the chart has recently formed a pretty bearish pattern that traders call a death cross. It sounds dramatic, I know. It's what happens when the 50-day moving average crosses below the 200-day moving average, and it's often seen as a signal of more potential downside. So here's the crucial point for the bulls. To crush that negative sentiment and basically invalidate that whole death cross signal, the stock has to fight its way back up and, this is the important part, close decisively above that 315 level. That right there is the line in the sand. Whew, okay, we've covered a lot of ground here. The fundamental catalysts on one side, the technical picture on the other. Let's try to distill it all down to what you should really be watching from here on out.
So keep your eyes on these four things. First, that technical battle raging at 315. Second, any and all information that comes out of that company call on the 13th. Third, any new developments on those EU-China trade talks. And finally, keep an eye on that short interest data to see if the bears start getting nervous and begin to cover.
So, there you have it. You've got this immense short pressure on one side and these major potential catalysts on the other, all of it playing out on a technical knife's edge. With all the data laid out, the final question is pretty simple. Will the bearish pressure or the bullish catalysts win this incredible tug of war for Rezolve AI?